Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing Samsung Electronics stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Samsung Electronics is the world's largest consumer electronics company. It is headquartered in South Korea and was founded in 1938. It went public in 1992 and currently trades on the Korean, London, BATS, Mexican, Deutsche Börse, and Vienna stock exchanges. It is the world's largest manufacturer of TVs, mobile phones, and memory chips. It's also a major manufacturer of electronic components such as lithium-ion batteries, semiconductors, image sensors, etc. Samsung Electronics is part of the larger Samsung Group. The electronics group brings in 70% of the total revenue. Samsung Group is by far the largest company in South Korea. It generates 17% of the country's total revenue. Let's get started with the model. We're looking at the ticker that trades on the Korean Stock Exchange. All the numbers in this spreadsheet are in Korean wons. This is a large cap company, 553 trillion market cap. They're trading at $81,500 a share, and they have 6.8 billion shares outstanding. Let's look at the financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. So you can see this company has a lot of free cash flow each year, peaking in 2018 at 36 trillion. Net income is the profit and loss on the income statement. It's revenue minus expenses. That also peaked in 2018 at 44 trillion. It's currently 26 trillion. Revenue is the sales for the company, and that's pretty steady from 240 trillion to 237 trillion. This is the company's income statement. The top line is the revenue, the sales. Below that is the cost of revenue. These are the expenses directly related to generating the revenue, and the difference is the gross profit. And they had their highest gross profit in 2018. That was a year they had their highest revenue. Then below that is operating expenses. Examples are marketing and depreciation. Then below that is operating income, which was also the highest in 2018. They pay 583 billion of interest on their debt. That's the lowest interest they paid in the past 4 years. And the bottom line of the income statement is their net income, which is 26 trillion, higher than 2019, but lower than 2017 and 18. This is the company's statement of cash flows. The top line is operating cash flow. That's how much cash the company generates from its operational business. You could think of operating cash flow as net income converted to cash, because net income is your accounting profit and loss. It's not actual cash. You can see in 2020, they generated almost the same amount of cash flow as in 2018, with much lower revenue in 2020. Then you have capital expenditures, which are investments in property, plant, and equipment. Operating cash flow minus CapEx gives you your free cash flow. They do have a lot of free cash flow each year, but most of that free cash flow goes towards their dividend payment. It looks like the company bought back a lot of stock in 2017. They also bought back some stock in 2018. When a company buys back stock, it decreases the shares outstanding, making your shares more valuable. They paid down a lot of debt in 2017, 18, and 19. They added some debt in 2020. Let's look at the capital structure. They're 93% equity, 7% debt. And their net debt is negative, so they could pay down all the debt with the cash on their balance sheet and still have a lot of cash remaining. Their WACC is 9.2%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4. That's 470 trillion. We discounted those numbers back to today's and the weighted average cost of capital, and we get a value of the company of 428 trillion wons. We divide that by 6.8 billion shares, and we get a calculated stock price of 63,000. They're trading at 81,500, so they're trading at a 29% premium. It's a sell according to the model. Simply Wall Street's valuation is 87,600, so they're saying the stock is undervalued. This is a stock price the last 5 years, so it looks like it's only gone up. It hit its peak a few months ago, but it's still trading at a pretty high level. They pay a 3.68% dividend yield. They pay out 78% of their net income, 81% of their free cash flow. So most of their money goes towards their dividend payment. Their beta is 0.93, so the stock moves with the market. The stock has gone up 63% in the past 52 weeks, while the S&P 500 went up 49%. The 52-week high was 96,800, the low was 47,200. The stock is trading above its 200-day, but below its 50-day moving average. About 17 to 19 million shares are traded each day on this stock. Of the 6.8 million shares outstanding, 5.5 million are on float, and 43% are held by institutions. Analysts are forecasting their earnings to grow 15%, their industry also 15%, and the market 28%. Analysts are forecasting their revenue to grow 5.6%, their industry 9%, and the market 10%. In the past 5 years, their annual earnings were flat. Their industry is up 2%, the market is up 3%. In the past year, their earnings grew 37%, the industry 8%, and the market 9%. In the past year, 3 years, and 5 years, this stock has moved with the industry, but has outperformed the market in each of these categories. Especially in the past 3 years and 5 years, it crushed the market. The biggest shareholder is National Pension at 9.1%, then Samsung, BlackRock, another division of Samsung, and Gregory Lee. Let's look at their financial ratios. PE is stock price over earnings per share. To calculate earnings per share, that's net income over shares outstanding. They're at 21.2. Their price to sales ratio is 2.3. Their price to book is 2.1. Their return on invested capital is 16%. Interest coverage ratio of 62. ROE of 10%. And current ratio of 2.6. Most of their current assets are in cash. And the company does seem to be well capitalized. They had a lot of free cash flow. They have a lot of working capital. And they also pay a pretty decent sized dividend payment. But they have over 127 trillion of funding. The best way to look at ratios to compare them to companies in the same industry, I've done videos on Apple and Cost, both in the same industry as Samsung. And Samsung is better in all the price multiples. They have a good current ratio. Apple is killing it in ROE. Samsung is at 10%. Cost is negative. Samsung has the lowest amount of debt. They're a big company, but of course smaller than Apple. And they pay the highest dividend. So to summarize, I have them trading at a 29% premium. This is a monster of a company that's the pride of South Korea. Everybody knows their products. They're sold all over the world. So it's a great long-term hold. I rank their free cash flows, revenue, and ratios 8 out of 10. Give this video a like, subscribe, or comment below. Also, if you'd like to support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.